Hello and welcome to Sectors Up Close. I'm Matt Gooderick. Well, our focus today is on travel and tourism, and our guest is the president of Calibre Financial Partners, Patrick Healey. Now, 1 year after the US Memorial Day travel weekend was crushed by fears of a spreading virus, Americans took to the skies and roads over the three-day weekend that traditionally unleashes the country's pent-up wanderlust for the summer, with just over 50% of the country's adults having at least one dose of a coronavirus vaccine. 7.1 million Americans were screened at US airport checkpoints from Thursday to Sunday, with Friday the single largest travel day since March 2020. And on the country's roads, 37 million were forecast to make a journey of more than 50 miles or 80 kilometres from home. So what does this sudden revival in demand mean for investors in the sector? Well, after languishing in 2020, the Dow Jones US Travel and Leisure Index has managed a robust 12% gain so far this year. It includes the likes of Uber, Carnival Cruises, Hilton Hotels and Delta Airlines, and drive-through businesses such as McDonald's. Many of these companies struggled last year and may not be in the best financial health even as demand recovers. So what is the outlook and how do investors choose the right companies to invest in? Well, let's ask that to Calibre Financial Partners, Patrick Healey. Patrick, many thanks for joining us today. Now, the travel sector has had, of course, a year like no other. Overall, what shape is the industry in?
Well, it's been certainly the most challenging year, I think, in my lifetime. And, I think a lot of the travel sector companies were playing defense, trying to shore up liquidity, keep their balance sheet strong. But now we're seeing a reopening and the economy is reopening and people looking to get back to their normal life. And that's why you're seeing such huge pent up demand and a lot of people flying. You're seeing on social media, them broadcasting, I'm going on vacation for the holiday weekend. Hotels are near max occupancy. It's good to see because these are companies that have obviously had to navigate through a difficult period. And you hope that that demand is sustained and lasts beyond just sort of that push period where people are trying to kind of reclaim their lives. And we'll see as the summer goes on and as we get later into the year, whether that is sustained demand or just kind of a reaction to, the reopening of the economy.
Yeah, we'll have to wait and see. Things are, though, potentially stop-start with threats of another wave of coronavirus, of course, due to new variants. Are the risks justified in putting money back into the sector?
Well, it depends on what part of the sector you're talking about. I think hospitality or hotels are going to do very well. I think there's a lot of people that are eager to travel. I think airlines is really kind of the only way for people to get to certain locations, and that should remain strong. And you're seeing a lot of demand and a lot of pricing power among the airlines in terms of what they're getting for fares. I think the cruise lines might be a bit different. These are international operations. They have to deal with various jurisdictions in terms of vaccine policies, et cetera. And certain locations are far behind the United States in terms of vaccine. And so I think some of those problem areas might take longer to open up, and cruise lines that travel to those areas may have a bit more of a challenge, at least in the interim.
Another issue I think we should discuss is business travel, which of course large swathes of the industry do rely on. Can you ever see that returning to pre-pandemic levels?
Yeah, that's sort of the $64,000 question, if you will, right? And business travel is really the high margin business for airlines and for hotels. It's a lot of executives that might be booking tickets on short-term notice, and so they have a bit more margin as the airline. I don't know. I really don't know. I've seen interviews over the last several days. One from an executive from Hilton who thinks that business travel is coming back in a strong way, and then I saw another executive from Airbnb say the opposite. Really, so it's going to see. We'll see how things play out, but that's really the high margin business for airlines and for hotels. And so I certainly have gotten comfortable myself doing more Zoom meetings with clients, and we're having an interview via that medium today. But I think it may take longer. I think businesses have gotten comfortable doing business in a different way, and if they don't have to hop on a plane unless it's really important, they may second guess that and may have more of a lag on the business travel aspect.
Okay, Patrick, as a final point then, what areas of the travel sector should have reasons to be cheerful heading towards the second half of 2021, do you think? Any areas of value?
Right. So value is a relative term, right? And some of those sectors have already front-run the reopening, and valuations have traded up on airlines, on hospitality. But I think hotel is a strong sector in travel and tourism. I think there's the operators are well capitalized and efficient. I think they will continue to do well, whether it's for leisure travel or business travel. I think the airlines will remain strong, and I think cruise lines are actually going to lag.
Patrick, many thanks indeed. That was Patrick Healey, the founder and president of Caliber Financial Partners. Now, before I go, let's bring you some of the top stories from the sector then. And Uber says its drivers have been slowly returning to its ride-hailing platform, allowing for a modest decrease in passenger wait times as the company seeks to take advantage of the recovery in travel demand. It said the week of May the 17th marked a new record for drivers returning to the road since the start of 2021. Getting drivers on the road quickly is crucial for Uber's efforts to recoup lost revenue and achieve profitability by the end of the year. The European Commission has proposed that vaccinated people should be exempt from testing or quarantines when travelling within the European Union. The EU reached a deal last month on COVID-19 certificates that will show whether a person is vaccinated, has recovered from infection, or has been recently tested. About half of EU adults have received at least one vaccine dose, but travel demand within the European Union has been slow to recover due to a patchwork of travel rules across the 27-country bloc. And finally, AirAsia X shareholders have approved the Malaysian Budget Airlines a debt restructuring, a significant step in allowing it to survive. AirAsia X proposed in October to waive most of its $15.6 billion debt and to issue new shares to raise $121 million. But plane maker Airbus last year joined more than a dozen creditors to challenge the plan, telling a Malaysian court it stands to lose $5 billion if the restructuring is approved. And that is your roundup of the travel and tourism sector. I'm Matt Gooderick, and this is Reuters.